Welcome to Legacy Engineered, the show where smart structure meets lasting success. Join Scott Arden, Chairman and CEO of Controllers Limited, as he sits down with business leaders, top entrepreneurs, and experts to uncover the strategies, stories, and structures that build lasting legacies. And now, here's your host, Scott Arden.
Welcome back to Legacy Engineered. I'm your host, Scott Arden. Today, we're excited to be joined by Jon Howard, a key figure behind Magnolia Ridge Capital, a private investment firm focused on bringing high growth opportunities to investors in real estate, private equity, debt, and emerging sectors. Jon has built his career on relationships, authenticity, and transparency in investing, helping investors across projects and private markets that often fly under the radar. Over the years, Magnolia Ridge has delivered strong returns in the 15 to 25% range, reflecting the potential of well-structured private investments. Jon, welcome to Legacy Engineered.
Scott, thanks for having me.
Absolutely. Absolutely. How's your new year going?
It's fantastic. So we've wrapped up, the oil and gas that we typically do at the end of the year, which really helping people from that standpoint. And then get several new projects that we're taking on and looking at right now.
Nice, nice. Well, that's, you and I have known each other for many, many years. I've seen a lot of the projects that you're working on. I'm involved in a couple of them. So, I'll always love to be having this conversation with you.
You too. I mean, it's funny. I lean on you a lot for a lot of advice that y'all do everybody. It's I always find it very valuable. And as you know, I will text you when I really have something I need to get an answer to. So
Absolutely. Absolutely. Just like yesterday, I got a text message from you. So, well, awesome. So, can you share with our listeners how you first got into private investing and what led you to start Magnolia Ridge Capital?
Well, it really was, I call it destiny. So, how you and I met through a mentoring group, I say many times that I never did those before. And it just, when the phone call came, I picked up, I got in, and I had spent all my younger career as a financial advisor, as the regional representative for the investment companies, mainly mutual funds and other retail products, as I call it right there. And the funny thing about that is I never saw the really high net worth people I went after were doing those type of investments. Typically when you got above half a million, $1 million, those guys didn't do that kind of stuff. They did the private investments that I do right now, and they would just kind of laugh at me when I would talk to them, walking the bank, whatever. And so I got out. Used to be on the road all the time. And so when my daughter was born, I got off the road, spent a small time as a VP at one of the regional banks here in Houston, and did that. But like I said, I kind of discovered that that was not where the real money was at. And so, and getting a 20% return, I mean, yeah, you could hit a home run on the stock every once in a while, but that just didn't happen very often.
Right.
And so I started as a real estate developer, got it through a family friend. We got into real estate development and did that well, still do that for about 15 years now. And through that, and starting to diversify my portfolio, I started looking for alternative investments. And it started out as me looking for money for me to put my investments in. And
Right.
that's where it came. And then my friends started saying, well, Jon, how do I get a piece of that? How do I get involved with that? And so that really kind of became this whole Magnolia Ridge idea that, listen, I've got, several friends that, some of them are better than others, but they're like, they're doctors, they're airline pilots, they're, salespeople. They don't have time to go out and do the due diligence, find sponsors that have good products. Most of these things are under $3 to $5 million. So it's not, it's usually 30 to 50 people will
Right.
be in one of these projects. So it's smaller. So you really have to know somebody. And
Right.
so I'm that guy that people know. And so, like I was telling you earlier about our new project, is I happen to have a friend. And so we put together, let's bring our groups together and we'll go out and do storage units in that instance. So, it's just kind of been an evolving, going along the process. And, like yourself as an investor in a couple of these projects, how do you find them? You find the people that that does it, and Exactly. And that's kind of
Exactly.
where we go from. Yeah.
I'm like, John, I need I need
Exactly.
whatever, or I'm texting
You
you,
call
hey,
me.
what do we got?
I need maybe need some tax deductions for the end of the year. Do you have any oil and gas? I'll get back with you. I mean, I literally
Exactly.
did two of those transactions December 31st.
Did you? Okay.
Yeah, I mean, I got on the phone call. We got the DocuSign out to us. They jumped in, got their money wired, and they got their 100% tax deduction right then. So,
Nice, nice.
yeah,
Well, I mean, that's one of the things that we always talk about, when it comes to the alternatives versus traditional financial, you're kind of bound to what products and services that you can offer solely through the bank. You can't kind of look beyond, right? And so, I definitely understand why you would want to go that other direction to say there's bigger things that we could be focusing on that are going to make more money, less people, and, are going to produce positive cash flow. So, cool.
exactly, exactly. And they usually, why there's always more risk involved with them, and that's why it's typically it's most of them are set up for accredited investors or those making higher net worth individuals, but it's they're getting numbers which aren't consistently out there in other products.
Right.
You're not doing a 4 to much like most retail investments. What we'll do is a 4 to 6% dividend to somebody, and then maybe have some equity appreciation on the end of it. We're talking about 10, 12, sometimes even more than that. Some of these private investments that, and then have equity appreciation on the end of that. So they're different animals, they're different hybrids. But again, with all that comes on the risk, and that's kind of where I get in is helping people evaluate that and let them know, what to look at.
Absolutely. Absolutely. Well, I know you emphasize authenticity and relationships as the true currency in business, right? And so, how does that philosophy shape the way you source deals or work with investors?
Well, interesting question. I literally just had that conversation with my new partner on this venture this morning. Is that we don't want to do it wrong. Okay, I just want to do it. It's kind of like we were talking about this fund that he set up and how we took all the negatives of what we've seen over the last 10 to 15 years and said, let's don't do any of that. Let's just make it very customer friendly because, a lot of these people are my friends. And it's so like when you call me and say, what the heck, John's going up? I don't want to have to take those phone calls.
Right.
It's bad when things don't work out right. It's horrible when it doesn't work out right in your friends. And so, and I'm in most of these people I'm friends with. I see them 2, 3, 4 times a year. We text, we have conversations, we'll sit at the bar. So it's that relationship. I only want to be in business with people that I like and people that I
Right.
want to be involved with.
Mm.
I have a no asshole policy
Love
anymore.
it. Love
Yeah,
it.
if you're one, I appreciate it. Go be who you are, but you
Not
just
here.
don't need. I don't need business that bad. I don't want to work and have fun. And it's kind of like this. I don't know a deal we're looking at doing in Roatan right now. Let's okay. I want to be around. If I'm going to go put on an island in Roatan, I want to be and sell houses or sell investments there. I want everybody around me to be somebody I like because I'm there too.
Absolutely.
Exactly.
Absolutely.
Yeah.
Well, and it all comes back to kind of that, well, not only integrity, but also that relationship, right? You don't want to connect people with other people that are going to be assholes, like you said, right? So it's like finding the right people, bringing them in, and just really building those strong connections. Absolutely.
Right.
Absolutely. Well, cool. So for many listeners, the world of private investments can feel mysterious. What would you say is the biggest misconception about private investing?
It's easier to get in than you think. Okay, it's a lot
Mm,
of times it's knowing it, it's understanding the risk. I mean, most people don't understand the risk of it. That I would tell you that's probably one of the misconceptions that they have. They'll think, oh, it's really risky, or it's not secured, or what are we doing there? But all of them are just like anything else. But they have associated risk that goes with it. But most times you just have to sit down and list that out and figure out, okay, does that really going to go with my money rules? Is that really going to work out? Like oil and gas has a huge illiquid risk to it. Okay, am I really okay putting this money and know that I can't get it back tomorrow? And so
Right.
those are just the things that you have to analyze and say, okay, yeah, that works for me or doesn't work for me. And I think that's where most of the misconceptions come in, is trying to figure those out. And they say, well, it's like kind of like and I take oil and gas because we just got done with raising large for that. It's like, okay, I can't get my money back. But then again, you're going to get that 100% write-off right then. And then it only takes, when you factor that in and cash on cash back return, you're looking at, okay, is it 2 or 3 years? Is that enough risk for me to get my cash back from that standpoint? Or is it like when this new fund we're doing it, okay, it's locked up for, 12 to 24 months. Am I okay with that? And then after that, I can access my cash. So, those type of things are just the parameters and misconceptions that people have that they really need to sit down and figure out and make
Right.
an educated decision.
Right. Well, and I think one of the bigger things is not understanding how to read a PPM, right? I mean, that's they're like, oh, it sounds super risky, but look through the PPM, understand what it's talking about. I mean, we talk about that all the time with our clients and controllers. It's like, hey, read through the PPM. Like you said, you have to have your own money rules. We can't tell you this is a good investment. We're not investment advisors.
Right.
I mean, that's not what we do. And so it's having, or getting with a team, getting with someone like you who's knowledgeable in being able to look at those PPMs and saying here in more of the layman's terms of, these are the risks, this is the outcome, this is the benefit, right? So yeah, perfect. Okay.
Yeah, I'm a prime example. I mean, New Year's Eve, I'm at a friend's, or not New Year's Eve, but last weekend, I'm at a friend's New Year birthday party, and somebody texted me, "What is this thing with Venezuela going to do to our oil and gas?"
Right.
Well, I didn't have a clue what happened. I mean, okay,
Oh,
hang on. Let me Google real quick to see what happened.
yeah, what's going on?
What's going on? And it's pretty high net worth client, so you want to respond as soon as possible to them. So I was able to type out real quick what the risk involved and what to expect, and really in that instance, what little effect it should have, short of long term, oil prices going down significant. They would have to go much more significantly, say under $30 a barrel for it really to have a significant discount. But yeah, I mean, it's kind of like, okay, yeah, that's what the risk is.
Right, right, right. Well, your projects span everything from real estate to private debt to niche opportunities like oil and gas and real estate development. How do you balance diversification with deep expertise?
Ooh, interesting. I say, like I said, we talked about it briefly there. I have a set of money rules,
Yep.
and in general, the first one is I don't ever want to be anything I don't want to be that I'm not have some knowledge of. you
Right.
know. Then there's things like, okay, listen, I don't put more than 20% in this area, or I no more than 5 or 10% in a certain project, and things like that. But that's how I do it. I kind of set those rules out right there,
Hmm.
and then and I help that let me from the diversification standpoint, and then we go from there.
That makes sense. That makes sense. Well, that kind of ties into, you always talk about never shying away from discussing the negative side of a deal. What is that level of transparency, or why is that level of transparency important, and how does it build trust?
Because you can always get me on the phone. I mean,
Right.
that's the number one thing that if you talk to any investor, and I've been doing this for almost 30 years now, whether with the old former investment companies, the number one problem they always have is I can't get a hold of you.
Right.
When things are bad, people tend to shy away from the phone. It's kind of like when we did, years ago. It's been almost 5 years ago that we did went out and bought a Ford dealership.
Hmm.
Great idea. Didn't always
I
work, didn't
remember
work
that.
out. I mean, we got caught in COVID and all the things that went there. Didn't work out in the end the way we wanted it to. But what I can always say is that, in fact, one of those investors from that deal called me yesterday. Okay. And so I mean, we were able to recoup almost everybody's investment back for them. But, I'm always proud of the fact that if you picked up the phone, I answered you and tried to stay in touch with you from day one. Every once in a while somebody would say, "Well, I didn't get an email." So, well, let's check it out. Well, we have the wrong email address for you. That's why you didn't
Right.
get an email, which happens because people change that stuff all the time. But
Exactly.
it's that relationship. And listen, I would rather somebody tell me, John, it hasn't worked out. I'm not going to do anything with you in the future. Great, I understand. Okay, I'm an investor too, and if that was your situation, I would be okay with that. But it's not because I didn't pick up the phone and either preemptively call you or when you called me, I gave you bad news.
Right, right. Well, I mean, that's the risk of investing, right? Is, there's going to be good ones, there's going to be bad ones. Unfortunately, the bad ones, yeah, they suck, but it is what it is. That comes as par for the course for investing, right?
Exactly. Well, I mean, we joke about it that we can write a book on how to lose $1 million. I mean,
Right.
I can write that book from an investment standpoint. Never too proud of it, but I tell you, I wouldn't be where I am today if I hadn't had some of those learning lessons.
Yeah, absolutely. I mean, it's the bumps and bruises, right? That you're like,
Exactly.
well, okay, that I'm not going to do that again. Well, but let's see what's going on over here. Or let's see what's going on over there. Exactly. Just
Yeah.
don't let the one fall keep you down. It was just like we talked about. It's an investment. So, absolutely.
Yeah.
Well,
I mean,
cool.
I
Well,
can guarantee you won't happen. It's on 2-year treasuries, and I think the yields yesterday were just a little over 3%. If you want
Okay.
to go that way, but then again, if you want to take inflation out of, you've lost what over half of that value in the last 20 years. So take your
Yeah, that's
choice.
true. That's true. Oh, well, what advice would you give someone who's interested in private investments but doesn't know really where to start?
Get with somebody that's got some track record. Get with somebody, whether it's me or with anybody, ask them, okay, what's your track record? Understand it, feel comfortable with it. I tell people all the time, your gut is your number one investment advisor. If
Yep.
it doesn't feel right for you, you're not going to sleep at night. I say always go with your gut. And then second, do your due diligence. I found it interesting in this last one. Project we just did, I had somebody that really, I think I went through 4 rounds of email questions with them. And some things he even asked that I'm like, I didn't even think of that. Seismic trouble on the well or something. And I had to go look it up what it was. But it was great information. Um, and sometimes you wish everybody would do that. They
Right.
typically don't. But what I liked about it is that, what we'll do for the next project is I'm going to take his framework because he's kind of one of those and set it up for an FAQ so that we have that information for the clients next time without you even having to ask for it.
That makes
Just
sense.
so we can provide better service for people.
Yeah. Well, and that's, those are those things that you learn over the course, right? Is,
Right.
taking or fielding those questions from different investors where it's like, yeah, I didn't even think about that side of things. But now that it's brought to the forefront, that's going to become one of the primary things that we're going to address up front.
Yeah,
Absolutely.
because GPT asked it for you. Because I found out later where you got the questions from, and it was a
Oh,
GPT
really?
question. It's like,
Oh, wow.
okay, yeah. I mean, I'm sure it was some article somewhere talking about that in oil and gas drilling, but that's okay, great. We have the answer. I mean, the operator of the company had the answer and knew exactly. No, we
Right.
don't get in those areas. But I'm like, okay, hadn't even really thought about that.
Hmm. Well, and they know the deal too. They
Right.
know the answer to those questions. So that's perfect. Well, awesome. So, question, since this is legacy engineered, what is the legacy that John wants to leave behind?
Well, it's twofold. Number one, from a personal standpoint, it's kind of some of the things is that listen, I want to be known as I mean, I'm an acquired taste. Some people love me, some people hate me. That's just how life it generally is. But in general, if you're one of those people that love me, I would like to know that that they felt that I always had their best interest in line. From a legacy along what you do. And we've had this conversation a couple times. It's my children, it's my grandson, it's my son and my daughter, and what kind of legacy I can create from them, not only from the strategic standpoint and the structuring standpoint that you guys do so well, but really teaching them. how to live this life and how to be more independent, not dependent on others. So, I mean, because I tell people I didn't really get involved. I mean, I did a lot of things and was searching for a lot of it, but until I was 45 and I just turned 60 last year. So, like, really, I've literally lived this fully in the last 15 years. And I would love for my kids to live a different life and have more freedom and choices that being like this allows them.
Absolutely. I mean, that's all it comes down to, that financial literacy, right? Is not only letting, get kind of informing them along the way. I mean, that's one of the biggest components in a lot of families is it's not discussed. We don't talk about money. We don't talk
Right.
about those things. And, when those conversations happen, that's when we start seeing estates diminish, especially upon, the surviving spouse's passing. And so, giving that financial literacy to ensure the longevity of the estate is absolutely critical for, not only your family, my family, for every one of our listeners out there, is, really giving that financial education. Because, it's what, two or three generations that we've seen where, you leave a large inheritance, but they don't know how to use it, and now all of a sudden everything is gone, right?
Yeah.
I
Yeah.
say that all the time. A legacy is not about what you leave someone, it's what you leave in someone.
Well, and so many times it's how you approach things. I mean, debt would be probably the number one conversation you would think there's that, it is, and I'm not talking about have debt on your car, but a debt on a piece of investment, on a real estate, a line of credit, whatever. People shy away from it, and it's like one of the greatest tools out there.
Absolutely.
I mean, when I can pull money anywhere from 4 to 8% and take that and arbitrage. I mean, I had this conversation last weekend at that birthday party and arbitrage that on 12 to 20 plus. I mean, it's just free money. It's somebody else's cash that they're letting me use. As
Exactly.
long as you do that under the risks that we talk about and you guidelines that you have and understand that how all that works and make sure you're fixed for that. I love free money.
Who doesn't love free money?
It's not free because I have to put my time and my expertise and manage all that, but that's just part of my day.
Right, right. Well, and that's one. The other thing is, debt can be used in a good way. If it's consumer debt, that is horrible debt. But if you're
Right.
utilizing that debt to make more money, ultimately print cash flow on other people's money, why not take advantage of that? And that's, one of the things that's not taught out there. It's not taught in schools on, unless you're getting into the investing area, is arbitrage, or getting into banking. I mean, that's how banks make money.
Right.
But, so yeah.
Yeah, but my
Okay.
question is, do you want to learn it from the uh your whatever that alternative studies teacher at high school that's telling you how to do that, or you want somebody that's actually done it? And
Right.
that's the real question. Is
Who's
that
never, yeah,
those guys
exactly.
really don't know enough. If they give some of that information, you like go, or even some of the Instagram guys that are out there is like, no, that ain't right.
Oh yeah. You see a lot more of that popping up, and it's like, no, 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 that's so much. Okay. All right. Anyway,
Exactly.
anyway. Well, right on. So for our listeners who are business owners and entrepreneurs, what's one actionable insight you want them to walk away with after today's episode?
Take in-depth look at it. When you look at a project, go in depth and look at it. Look at the PPM, understand what you're looking at. I'm not saying you have to run it or that you even want to run it, but you want to take a look at whatever you're investing in and know where your money's going and make sure you're comfortable with that.
Yeah,
I
absolutely.
mean, sure, you can always jump over to my website and take a look at our projects or whatever, but whether it's mine, whether it's anybody else, you know, make sure you understand what you're investing in.
Yeah, absolutely. Great advice. Great advice. Well, John, I want to thank you for joining us today and sharing your perspective on private investing, relationships, and building real trust in business. So if today's conversation sparked questions for you about your own structure, strategy, or long-term planning, our team is here to help. Whether you're thinking about private investments, entity structure, asset protection, or aligning your advisors, we'd be happy to walk you through it with you. Give our office a call or go to www.controllersltd.com to schedule a strategy conversation with our team. We'll help you identify where you're well positioned and where a few proactive moves could make a meaningful distance. Until next time, thank you for listening to Legacy Engineered.
Thanks for listening to Legacy Engineered. For more episodes and to connect with Scott and the team at Controllers Limited, visit controllersltd.com. You can also follow Scott on Instagram and LinkedIn and start building your legacy with confidence today.